in this other than some profit taking, low volume day, maybe algorithmic trading taking hold. But one thing I do have to point out, every sector right now is lower with the exception of energy, which has been one of the worst performing sectors, kind of a reversal on one of these last trading days of the year.
Right. And so I think there is a little more meaning in this. And I do want to riff off of something Josh said. So Josh said like rebalancing and there's trillions of dollars, but I want to put the numbers to that just to give you like a really concrete idea. So let's say you went into this year with a 60-40 portfolio. Let's say your stocks are up about 30%. Bonds are flat. By the way, like long-dated bonds, the Barclays Ag 10-year index is down 4% year to date. So if you started the year with a 60-40 equity fixed income split, right now you've got 66% in equities and 34% in bonds. So when Josh talks about rebalancing, those numbers really are huge. Right, that's an enormous divide to need to think about peeling off 6% of equities and then bumping up another 6% of bonds just to get back to where you started. And I've had this weird sense this whole maybe the last quarter that a lot of the rebalancing that usually people kick to next year, the tax loss harvesting that happens at the end of the year, things didn't happen this year. And I don't have any actual proof of this. It's just kind of like, you know, when you're in it, you feel it. Things didn't happen in the normal timeframes this year. Okay. And my sense is that people are positioning for next year this week and last week and the week before. So I actually do want to read into this a little bit. I think people are trying to be preemptive because they know that that rebalance is going to happen Jan 1, December 31st, right around then. They want to be ahead of that by a couple weeks. I also have seen profit. What really surprised me, right, is the huge stocks that were up so much. There hasn't been as much profit, or sorry, there has been profit taking in the last couple weeks where I thought it wasn't going to happen until after the first of the year. So I think this is kind of telling of what we're going to see as we cross the end of the calendar year.
It sounds like you're saying there's been a pull forward of the tax loss harvesting that you're expecting in January. It's been over the last couple weeks. So what does that mean about the market going forward?
Well, I think, okay, so if you think about what we've seen in some of the Mag 7, how they've just kind of cooled off. I thought they were going to go gangbusters, like full throttle into year end, and that no one was going to sell anything until after the first of the year. So we've seen some of that, but I think it's probably going to happen even more after the first of the year because there's still a ton of people out there sitting on the sidelines saying, like, I want to wait and not see that tax bill until next year. So I think that's why we're getting a hint of what's to come, and what's to come is going to be a real, to Josh's point, rebalancing. And we see it. I think one of the things that surprised me too is small caps down so much because everyone's talking about how small caps should be up next year. I think that's tax loss harvesting. I think those are kind of coiling up, maybe ready to spring. But it just doesn't seem like things happen in their normal pattern this year.
All right, Kevin, I want to come over to you. I do want to hit on the fact that every sector is lower with the exception of energy.